Joining me on the line to discuss today's US CPI data is Andrew Grantham from CIBC World Markets in Canada. So Andrew, CPI excluding food and energy for February came in better than expected at 0.2%, and the year-on-year figure came in higher than the previous reading of 1.6%. So what exactly impacted the data this month?
The CPI figures were a little bit firmer than expected, especially in the ex-food and energy, up 0.2%, for the annual rate ticking up a little bit. I mean, it wasn't a big move. One of the things we did notice in the data was that there didn't seem to be that much of a pass-through, at least this month, from the strong US dollar into areas such as apparel and auto prices, which do tend to have quite a large import content. And that's something that was a little bit of a surprise to us in those core readings. But as I said, the core CPI was pretty close to expectations still.
In your opinion, could we see positive figures from here on? And is it likely we could see an interest rate hike as early as June?
Our forecast is actually for a June hike. I think what we saw from the Fed statement, they said that they expected inflation to stay close to recent low levels. So as long as inflation doesn't decelerate, I think they could still be looking to hike rates as early as June, as long as the growth figures pick up in the meantime. Inflation is probably unlikely, at least on the core level and even at the headline level, given that we've seen some further decline in oil prices since the end of February. It's unlikely that the year-over-year rates of inflation are going to get any stronger in the near term, and that's when we're talking over the next 2 to 3 months. But I think in terms of Fed policy, as long as they don't decelerate significantly, they could still be looking to hike for the first hike in June.
What effect will this news have on the US dollar in the short term, and what's your outlook for the rest of the year?
So the US dollar, what we were arguing even before the kind of slight pullback in the US dollar after the FOMC statement was that we saw that the US dollar was getting maybe slightly too strong. It was becoming actually slightly overvalued, and we saw from the trade figures and some of the manufacturing data in the US that the strong US dollar was actually beginning to have some impact. So we've seen the US dollar fall back a little bit. I think when the Fed does hike for the first time, whether that be June or whether that be September, the US dollar is going to strengthen a little bit further, probably reaching around the highs that we saw just a couple of weeks ago. But as I said, it is getting towards overvalued territory now. So, while the US dollar could strengthen a little bit in the near term, I think a longer term horizon, maybe 12 months, is to see it a little bit weaker than current levels.
Thank you very much, Andrew, for your comments. Well, that is all for today's interview. Join us again tomorrow for a fresh look at the currency markets. Goodbye for now.